Hey, what's up, guys? Can we get a quick mic check? Thanks, Cowboy. All right, guys. I think we're good. Let's give it a go here. All right, what's up, everybody? How you doing tonight? All right, so tonight's stream again, we're gonna kind of do a little bit of course, recapping from the massacre, right? But along with that, we're gonna talk a little bit just about more about the emotional side of things, just mental preparation that needs to be done in order to become a profitable trader, right? So first we'll quickly go through a few of these assets here and just kind of see what we're looking at. So again, we identified a bearish butterfly. We said the bearish butterfly has a D short entry target that ranges between the 1272 and the 1618. We hit the 1272, and that was pretty much the end of it, okay? You can see that came down and hit both the C and almost the A, not quite the A, though, target, which, I mean, technically here, you would have been targeting, you would have first been targeting this B, right? Well, that's basically kind of where it broke. So when you got up here and you made your way back down and you got back to that B level, you know, that was kind of very critical area, right? We were watching those levels. We had a stop like right here, right? So 59.3. So as soon as we lost that, you know, we got stopped right here. If that would have held, we could have ran back and went for the 1618, right? But anyways, your first kind of target would have been this B area. Second target would have been right here at C. Okay, 55.5. And then your final resting point for this would be ideally down here at the A, which you never made it quite that far. But that being said, you guys will see I basically have this kind of void here, right? We have this gap. And then we hit a bunch of resistance, all right? Yes, there's some resistance here. We're kind of at it right now. You're kind of wicked through it, but have fallen back below it, which is 55,600 or 56,600, excuse me. Anyways, the way I'm kind of looking at this is it's like a range almost. Okay, so if I were a range, what we want to be careful of here is if we lose the range, of course, but so if I were some kind of range like this, and the highs were up in this area, we're basically, we're at the middle, we're at the range midpoint. Okay, what do we talk about? We don't really buy midpoints, right? We try to avoid that if at all, if we can, right? So let's be a little more conservative even, and let's use this kind of like this, because that midpoint will now align with that previous resistance area over here. What was once resistance here was then turned into support here, and has now been regarded as resistance again. Okay, so let's kind of set up like this. So basically what we want to do is we want to buy the range low down here, which that's how we end up maybe getting a wick out of it and back up into it, right? Okay, so that's a possible area. Or we want to be looking kind of at, taking a second whack at a short maybe, and shorting this, all this resistance up in here, okay? So likely scenario here is Bitcoin runs up there. All right, there's a lot of liquidity kind of in this area that I think they go up and they grab it. Okay, they grab all that stuff and they go up, they go up, they go up, they go up, and they square the level. Okay, somewhere up here, right? See, we're looking at some of these kind of square up areas. That's why all these areas are highlighted. Any one of them could react. From there, they could dump it again, okay? Somewhere here, though, this just feels like this could even have happened already here, right? Up, and then just dump it from the midpoint. So you're either going to get the midpoint, or you're going to get the range high, right? That's kind of what we're looking at. Either one of them should react this way, though, you would figure. So if you get up above this midpoint, you would then want to, break, hook, and go, right? You want to regard it as support again. And if you could do that, that's how you can get these highs. But if you fail here, right where we're failing currently, this is how you could sell off again. So this is, again, a critical area. This is not an area where we want to take a position, because it's a coin flip here. Can it go up? Yes. Can it go down? Also yes. We want an area that's more clear of an edge for us. Okay, if this gets back down here, this is how we could paint divergence. Okay, so now that you guys kind of have a picture of what we're looking for, you can clearly see that obviously there's all these red lines of overhead resistance, okay, that are now going to fight you back up. You also can clearly see we have a green box down below, okay? This green box is down here at 4,700 to basically 4,850, 48,500 area. So, okay guys, so what I'm marking here is this square up down here, okay? If you look way back left, there's an area here that I'm concerned about, okay? That's where we're getting this 47 kind of area from, okay? So that's what this white line is that's in this box, okay? So what else are we doing there? Okay, so basically if you were to fib this from the low to the high, we have a 1272 right there at 46 as well. That's the bottom of the green box. So we're kind of, remember how we build ourselves an area of interest, okay? So that's where you get that bottom of the green box. Then you also, from this previous discernible low, February 28th, duck birthday, it's always going to be an area of interest, right? To the highs, we also have a 786 in this box, okay? So we have a 1272, a 786, and we also have a square up, okay? So now that we kind of have an area to focus on, we're looking for a potential bullish cipher. So key characteristics of a cipher are they have a slightly higher high on the C point. You see how this C is coming up here and it's a higher high? And then now we look for 786. 786, 786, 786, 786, right there. Okay, so let's paint this cipher yellow. And you guys can see it a little more clearly now, what we're looking at, okay? So ideally, if this bullish cipher in yellow were to play out, it's not done yet, okay, guys? It's not complete until you hit the D and double bottom at the D and hold it, okay? Act it, square it up, hold that as support. So this is going to go, okay? All right. We come up here, get back into this resistance area. All it's going to do is again put in another lower high, okay? So if we were looking at this at just a bunch of lower highs at this point now, okay? Now that we've kind of confirmed a few of them, right? So we had the initial high at the 1272 originally. That was at 65,000, okay? Then from there, we obviously kind of put in a small little local one, but we could just mark this one, more discernible. We don't have to mark every single one. But you can clearly see what I'm doing here, that there's consecutive lower highs. So even if you sweep all of this resistance area here, you'll still put in another lower high, okay? And then you could sell off again. That's why we need to be concerned with that. So basically, you know, just very, very concerning. So if we can get up here, fail anywhere here, it doesn't matter where we fail. Let's just fail, come back down. What this is going to now do is allow us to put in a divergence. Okay, so right now, the previous, look at the red, just look at the red islands, okay, of negative momentum. Okay, so this previous island here happened up here, okay? You see this? It was on April 12th at 59,600, okay? And now this bottom of this current negative histogram island on the MACD, it happened obviously last night, right? At 50,000, excuse me. But it was just a back test of a level, square up, psychological 50K. You got a rally, so it wasn't that unheard of, right? I mean, we saw a butterfly, we came down, we hit the C and almost the A. It's just like, okay, that's what happens, okay? So nothing scary yet that says we're going to zero, okay? Nothing like that. Just patterns playing out. All right, so look, what I'm looking at now, let's focus back on this MACD, okay? So we identified this negative island of negative momentum, April 12th. Let's bring that down to last night, okay? Let's make it red because it was bad. And now let's take that same red line and let's paint it on the chart where it aligns with price action, okay? So what is those two trend lines doing, those two red lines we just painted? You see how they're going in the same direction currently? So what that's called is converging trend lines. Then think of the MACD. The MACD is just a indicator of moving averages that are convergences and divergences. Okay, MACD, moving average convergence divergence indicator. So we currently have a bearish convergence on the MACD. What does this signify? Typically that the selling is not done. The bears are in control here, okay? Now, let's take that same exact area of price action and let's paint it on the RSI. Let me just zoom in here so we could paint that a little more detailed. Boom. And the low last night was down here. Did we get into oversold areas? Yes. Did you get a little bit of a kind of a swing in relative strength there? Yes. Is that how you got your dead cat here? Probably. Yes. Also, you hit a square up. You hit take profit levels of a butterfly. Okay. But once this butterfly is done and hit these targets, this butterfly could be dead now. Okay. So now that the butterfly is dead, now we got to look at it without a butterfly. Okay. If the butterfly is now played out, now we're just looking at a cipher. If I'm just looking at a cipher, is the cipher complete? No, the cipher is not complete. The cipher is at a range midpoint, backtesting what was once previous support as now resistance. The cipher's completion zone is around 47,200. Okay? That's when the cipher goes live. Currently, it's just a potential pattern. Okay? It requires 5 touch points here. We have 4. That's something. That's development. We're in development, but we have not completed. Okay, so buying a range midpoint, not what we do. This is what impatient people do. We get rewarded for being patient traders here. Okay, so we're gonna wait. That's the current plan on Bitcoin, is wait. All right. Can this come up here? Sure. Can it dump from there? Absolutely. So until we get a more of a discernible edge, we need to be patient. What are we looking for to give us an edge? Regardless of where we kind of fail here, it's still going to paint another lower high. Okay, so as long as that happens, this is still looking like it's going to be a cipher. Okay, how do we invalidate the cipher? Well, we would start painting higher highs than these previous points, right? We would get up here back above the C. And you can see where that's at. It's at a 1272, right? We said that. It was a 1272 on the butterfly. Remember? So if you're just looking from your swing high A to your swing low B, that cipher C anchor point is sitting at that discernible 1272 fib extension 65,000, okay, area. So if we want to invalidate this, we need to break 65,000, of course. But even before there, probably just breaking 62,000 will probably even start really having us question it. But I mean, technically, you could still have some kind of double top here at the C, but typically you don't. It's 3 falling peaks, okay? 3 falling peaks, Bulkowski reversal pattern, dumps you into the completion zone of a different type of reversal pattern, which is now a bullish cipher that has you going back the other way. Guys, this is just waves. We go up, we then go down. We go back up, we then go back down. We go back up again, everybody goes, aha, we're rich again. And then we go back down, okay? Just get used to it. Figure out how to buy the low and sell the high. That's it. That's it. I know it sounds stupid simple, but you have to make it stupid simple again. Like it was your first day. Your first trade was easy. You hadn't been rugged yet. You had yet to feel the pain of the rug, okay? So you were still okay. You were able to just, see, oh, looks like a low point of, maybe I could enter here and maybe I could get a little money here. Okay, so try and get back to that original starting mindset. It'll kind of help, bring it down. You don't overthink it is what I'm trying to say. Okay, so anyways, what we're looking for is this potential slightly, again, third falling peak here. Reverse, dump again, sweep the local low. Okay, so we're going to sweep this low, and in order to sweep it, we would break this level here. Okay, so we'll make that yellow, I guess. Okay, so we got to sweep that. We also technically did not complete the dump of the butterfly, okay? So if we were to repaint the butterfly, again, okay, the butterfly was not done dumping. We hit the first target, which was the B, kind of midpoint, right? We hit the B, right? As we dumped, we hit the B. That's where it really kind of nuked. Then we hit the C. Okay, we're good. But we failed on the A just slightly, okay? Like, you want to sweep it usually. Because if people had stops there, they didn't get swept, right? We like to stop people out. It's a stop hunt game that the bots are playing, right? The algos. They're stop hunting on purpose. So you would figure it's kind of like, okay, I'm trying to tell you guys something. I'm trying to give you this initial dump, okay? That, look, I'm taking over here for a second here. Bear's got this for a minute. I'm going to give you a dead cat bear flag. Put in a slightly lower high. Again, third lower high, 3 falling peaks, and then I'm going to dump and I'm going to sweep the local low and I'm going to sweep the previous low. And by doing so, I'm going to put yourself into a 786 cipher PRZ, pattern reversal zone area of, area. This would be an area of layering between 48,000 and 46,500. Okay, so if you guys want 46,500 to 48,000. This is the area. The sweet spot in there is 47,300. Okay, that's the sweet spot. So let's look for that as your potential area to layer for a long. Okay, but check this out. If you get this high, slightly lower high, you sell off again. You're basically just kind of, at that point, you're now painting some kind of trend line falling, right? You see that? You would now just be painting a downsloping trend line that gets regarded once again as resistance temporarily. This is going to come all the way down here, and you're going to double bottom in the completion zone, and this is going to act as the spine of what may potentially be some kind of dragon where you have a head. You're painting the spine, you come down, you double bottom, put in the feet, you break out, tail your way back up to the top again, okay? So let's keep that in mind. But for now, if we do this, what now happens? So see our red line here? Okay, so our red line is now going to do this. Look, you're about to go positive again. Okay, slightly. Say you put in a slightly lower levels of positive momentum and you sell off again. Well, at this point, it's highly unlikely that you sell off so dramatically that you can sweep that momentum again. What's more likely is that you put in a slightly higher high on the momentum here, okay? Same thing on this, kind of on this RSI here, okay? You kind of go up, but you end up selling back off, and you put in a slightly higher high somewhere on this relative strength, okay? So what's now going to occur is from this previous swing low area to what'll be the new low, you're going to paint bullish divergence, class A. So that's going to look like this. That's also going to look like this. Alright guys, so what is this doing? This is signifying a reversal in momentum, a reversal in relative strength. It's hitting a completion zone of a significantly large bullish cipher on a 4-hour time frame that you could also see on the daily. You're hitting a square up. You're hitting a 1272, you're hitting a 1618, you're doing a lot of things, okay? That's what we look for. Again, we're waiting for the ball to be back in our court. We're going to create the edge, okay? So again, look at this type of scenario where you created the divergence here. You see how you sold off initially, but you got to create this little bit of positive momentum and then sell off again. But when you sold off the second time, the momentum was not as severe as, you had lower levels of negative momentum on that sell-off anchor point that created that pivot, okay? You also had kind of a swing in the tide of the RSI there as well, but it was more apparent there on the MACD. And I'm sure you were probably at some sort of critical fib there, right? Let's see, if you went from A to the XI. Yeah, so you're right at the 618. So again, critical fib level support, right? And we have divergence on the indicators, right? We're trying to align things. So right now, we don't have anything aligning here. All we have is things converging to the downside. Well, that's going to push us back into the divergence, okay? We got to somehow build this sweep, hit, then go. Okay, guys, that's the plan on Bitcoin. Right now, if you want, you're buying the middle of a range. This is how people get chopped up as impatient traders, not willing to wait or identify pattern development or wait for pattern completion. Simple as that. Patient man's game. To each his own. Okay, guys, similar situation. The range is almost defined for you without us even painting anything. We came back down, we back tested previous highs, we squared up. That was last night. Dead cat, run up, square up the top side, put in a slightly lower high, right? This is the same story as it usually is. Okay, we've come to find this out. Okay, so what does this look like? Sorry, this is kind of lagging. One second, guys. Bear with me. Speaking of which, can you guys hear music or not? I'm about to turn it off. I can hear it. It's really nice. It's soothing. But I don't know if you guys can hear it or not. But it seems to cause a little bit of delay. So I will speak in silence moving forward here. Okay, I think we're good. Alright. Hopefully that cleans up the lag a little bit for us. Okay. So, Ethereum. Similar situation, okay, where we're talking about building these ranges, where we kind of have this range low point here, and we're taking that up into the range high, and you're sitting at the midpoint, literally in the middle of a range, painting an indecision candle. How much more indecisive of an edge would you want? Like that's opposite of what we do, okay? We look for an edge, and you're literally getting indecisiveness at a 50-50 point. Like that's the worst trading odds. Like you don't want that. There's nothing there. That's literally you have a better chance of just taking out a quarter, knocking on your neighbor's door and saying, "Hey bro, let's play heads or tails, $5 a flip." Like your odds are equal. Okay? There's no edge there. Right? It's all random at that point. Okay, can you do it? Absolutely. You can do whatever the fuck you want right now, right? That's kind of one thing we'll talk about in a while, but the reason you guys are here and you like trading is because it gives you the freedom to express yourself in ways that you're not allowed to in typical society because you're set by boundaries and restrictions and psychological beliefs that keep you within your defined space, which yes, some restriction or boundary in society is kind of required to maintain society, or else we'd be in a Mad Max scenario. And we obviously figured out that if living in a Mad Max scenario where one doesn't care about rules, what happens? You inflict self-pain upon yourself because you do things. It'd be like it's like I let you go live in Vegas or something forever, and you just have no rules, and you're just gonna hurt yourself. You know what I'm saying? You're gonna catch something. You're gonna OD. You're gonna blow out your. I don't know. It's just a lot of bad things can happen in a atmosphere of no rules, right? So in trading, though, nobody creates these rules for you. You got to create them for yourself. Otherwise, you're going to inflict more self-pain upon yourself, okay? So, again, we just said we're buying in the middle of a range here. We don't want that. What is likely to occur here is a Bulkowski 3 falling peaks, where we had the initial high on price, we had the slightly lower high on price, and we're attempting to paint the third falling peak. Okay, if you get this, you'll square up somewhere here. You have a little square up action right here, whatever. Doesn't really matter where this happens as long as it's below this one. Okay, you don't want to see a peak that looks like this. That's when you go bullish again. Okay. Ideally, you're not going to get it. You're going to fail. You've already got, look at this bounce already, okay? Tell me that this doesn't sound crazy. You hit this low, and I'm telling you, you're going to bounce 26%. And you mean to tell me that you don't think we're going to sell off there? You see what I'm saying? Like, you better, watch the fuck out, right? Okay, 25% recovery, and then sell off again? Absolutely, okay? Absolutely. All right, XAVCD time. This is coming from a larger area, right? So we're looking at similar things to Bitcoin. We're coming back to previous areas, and we're looking for cipher type of situations here, where we have a previous discernible swing low. We take it up to the highs. Okay, the first length is irrelevant. It's just an impulse up. Then you sell off. Okay, so we sold off 786. Okay, we put in a 7.86 retracement. Then we're going to have a partial rise, like we used to partially decline the past couple weeks, right? We're doing this the opposite way. So we're looking for some kind of 786 here. 786 would be here again, something like this. And then, we sell off again. This is where we get, it just depends, right? On ETH at this point, I mean, you could paint some kind of Gartley here at a 786, but I just figure you're going to backtest this previous area, somewhere. We had this all painted here. So you would figure you backtest it or you sweep it. So you got an 886 right here. So 886 would be kind of more of a bat territory. But again, it's kind of like you hit that trend line, right at that spot. You can 886 right here like this, okay? And it's kind of like you have this area where it's like X marks the spot type of situation. And you'd paint some kind of Gartley type bat type of harmonic as Bitcoin's painting a cipher, right? They all kind of paint their own, but they all align in similarities because you have 6 different bullish harmonics. One asset could paint a Gartley, another one could paint a bat, another one could paint a cipher, another one could paint a butterfly, another one could paint a shark. All of them say it's time to reverse, and then you go again the other direction. It just, it's like that, right? It's like one pattern's painting a double bottom, the other one's painting an inverse head and shoulders. They're all setting up for a higher price. Right now, they're setting up a dead cat bear flag, square up, sweep the lows, set up a different type of harmonic. At that point, you'd be back testing. You already did it once, and it was good. I mean, it was good. All these previous highs you had back here, right, of these previous harmonics, that's just, you back tested the top side of them first last night, and now we're kind of looking at kind of the lower side of them for this D. Okay, so somewhere in here. On this, we have not painted the C yet, so we got to go up still, paint the C, okay, put in the slightly lower high somewhere, right, and then we could come down and hit the D. We don't really like to take a trade at the C though, because this could just invalidate everything, right? So the C on a harmonic is not technically anything. It's just an anchor point on the way to a pattern, but you're not at a pattern yet, okay? So again, let's clean this up a little bit right here. So we got a kind of a plan here. I'll paint the harmonic again after. What I want to just show you guys here again is the divergence that we're looking for, okay? So currently, we had this high on price, or this low, and then we put in a lower low. Okay, so again, this bearishness is converging to the downside. Okay, same thing on the RSI here, right? We're showing bearish convergence where we want to see bullish divergence, or at least hidden bullish divergence, right? That's how we get our coinciding variables to then align with our bullish reversal patterns, and that's how we enter into an area of low risk, high reward, putting the probability of a reversal in our favor and also the edge in our favor, with a position able to be entered at a 3-to-1 risk to reward. Okay, we got to follow the rules every time, and as long as we follow the rules every time, and we're mindful of the leverage, and we don't put our whole stack in there on every position, right? Look, I just told you all these are kind of aligning similarly. So you don't have to put your whole stack into Bitcoin. You're able to put some into Ethereum. You're able to put some into Litecoin. You're going to be able to put some into other assets as well to diversify. And you then also need to save some in Tether to help your margin ratio, okay? You got to maintain a low percentage on the margin ratio to avoid getting margin called, which then results in liquidation if not properly addressed. And typically you don't have much time to address it. Sometimes the margin call and liquidation happen simultaneously, okay? Because of a bad enough wick. So you need to have enough capital reserved in order to make your margin ratio far enough away that a call is never made on your account, right? On your position. And in order to do so, you need to enter into a position where only a percentage of your stack is in the trade. The majority of it is actually always on the sidelines as protection. And you just, by continuing to grow what's on the sidelines, you're able to enter into larger positions as you gradually increase your overall portfolio, because you're able to maintain the same type of 2, 3, 4% position sizing, right? It's just 4% of a larger number, so it allows you to trade with bigger size, but you're still maintaining your rules. You're not breaking your rules. You're just growing your stack, right? You're compounding. But the only way that's going to ever occur is if you're mindful of the rules initially, okay? And in order to maintain it, you need to maintain those rules throughout, all right? So look, we put in a slightly higher high, three falling peaks, Bulkowski reversal pattern on the back side, and then we sell off again. We sweep the previous low somewhere, right? We sweep these lows, we sweep them again. That's where we then begin to see possible divergence, right? Because this would then follow, and it would be a higher level of negative momentum, and the relative strength would hit the 50 probably, whereas the neutral point, and it would go back bearish again, but it would fail to sweep the previous levels of relative strength, and you put in a slightly higher high on both of the oscillators, okay? By doing so, again, we talked about this giving us our reversal in momentum, putting in a possible bullish divergence type of situation where we have a low on price with a, sorry, we're lagging. Low on price with a slightly lower low, right? And at the same time, we end up painting higher levels of negative momentum, and at the same time, we start painting also higher levels of relative strength, giving us divergence in the oscillators, where price is going in the opposite direction of the oscillators. The oscillators are starting to signify that the bears are weakening. That less and less sellers are stepping in here as they feel that the area for a short, the risk to reward for a short becomes less, right? it becomes reduced. And as that happens, fewer bears want to ape in at that point because they're like, look, man, why am I going to ape in at the midpoint looking for a short, just like you're not aping in at the midpoint looking for a long yet, right? They're going to see it the same way once they reach these lower levels. They're going to be looking at the oscillators and saying, oh shit, we're starting to paint bullish divergence on the oscillators. What am I doing shorting here? They're going to start exiting the shorts, taking profit, and potentially looking to even flip bias if they're proper traders with the proper mindset, looking to then go and turn bullish, right? So that's where we step in. We all start to flip at the same time. The momentum shifts. The bids step in. The price action, it's displayed in the price action as you start to have price action continuation at that point to the upside due to hitting your harmonic completion and due to having coinciding variables across the board. Okay, you see how everything is aligning the way we painted it here on Ethereum? We want this to align. We don't want these to be mismatched, right? Mismatched is uncertainty. We're living in a world of uncertainty, and especially so in trading. Looking at a chart, it's very, very uncertain as to what's going to occur next. So again, as traders, in a world of uncertainty, we're looking to attempt to create some kind of edge, right? So we have to be patient until it's displayed, and it has to be displayed on a significant time frame. If the time frame is too weak, or the pattern is on a too small of a time frame, it all plays out too fast, okay? And you end up getting underwater again because the trend was actually bearish. You were just looking at a bullish low time frame. And when you're doing that, you get trapped because you're looking at a 5-minute or something and you're going bullish, and ultimately you're just putting in a slightly lower high on the Bukowski 3 falling peaks, and you end up getting rugged again. And by the time you realize it and have puked your position, all you did was now paint the bullish divergence, and then the trend goes in your favor, and you get rugged again the other way. So that's the point, okay? That is literally the point. Don't be the liquidity, okay? Take from the liquidity when necessary, but it's not always every second of the day that you have a clear edge, okay? Most of the time as traders, we need to find a way to sit on our hands and watch from the sidelines. Think of yourself as the offensive coordinator, right? Like for the Buccaneers in the Super Bowl, you're coordinating for Tom Brady or something, right? You could see all the action from a zoomed out perspective of the field, versus if you're just Gronk standing on the edge of the line acting like an ape, just smashing your head against the other lineman, right? You don't really know what's going on from a backed out, zoomed out perspective. But that offensive coordinator, defensive coordinator up in the box, he's seen things zoomed out. He's looking at his plays, and your playbook is your harmonic patterns. Your cheat sheet is in the cheat sheet channel. You're looking at your playbook and you're saying, wait a minute, I don't got a good play here. Maybe I need to call timeout. Something's not right. We're gonna lose. Something's bad here, right? We're gonna get a flag for for something, right? It just you have a bad feeling in your gut, and you need to trust that. But other times when you're like, oh shit, look how the defense is adjusted to one side. I have an edge over there on the right. Call in an audible to Brady, switch the play, change bias, create the edge. We got a mismatch now, and we exploit it. But until we have that, we're patient, right? Just run up the middle, run up the middle. You're playing the game, but you're not doing those crazy things, right? Like going for that 40-yard pass until you've found that edge, or you've set up the defense from previous plays, right? So right now, this is kind of Bitcoin or Ethereum or these assets setting up impatient traders here. And then later, when the edge comes, boom, that's when you get those nasty wicks, right? That's when you get that $10,000 candle you got last night, okay? There was edge. We took profit on Ethereum at $2,500, okay? What was the top on Ethereum? Somebody want to tell me? 2,539, okay? We got out at 2,500. I'm sorry about those extra $39, excuse me. But you know what? I could care less. Okay? I told you guys that. I was like, I'm getting out at 2,500. You guys literally typed in the chat, Duck's going to dump on us at 2,500. So, I mean, we all knew. Okay? Same thing on Litecoin. Let's move along to Litecoin. We said 304. What was the top on Litecoin? Yeah, it was probably a little higher. The top was 335. We got out at 304. Price dumped from there all the way back down to 230. We got out at 304, able to reload in this area, or able to not only that, but have capital preserved, profit gained, and the ability to wait for an edge and deploy said capital for another run to the upside. That's how we trade, okay guys? So you need to get from where you are now to there. And I'm going to tell you something. It's attainable. You can do it. There is a way to become you can master trading harmonics, okay? It is a masterable skill that can be achieved. But as much as that is true, it will still not be your ultimate, the thing that makes you successful as a trader. It's not going to be you mastering harmonics. Is that going to be have a good proportion in your being successful? Sure, 40% of your success is going to come in that. But what's that other 60% we spoke about? That's your mental mindset, right? So as much as you need to master harmonics, you even more so need to get your mind right. Okay? It's even more weighted on that other side. So if think about how important you think harmonics are in your success right now as a trader, and multiply that. That is the importance of the mindset to your success as a trader. Okay? So again, on Litecoin, we came back down, we had this white line there. It was the previous high. We touched it. You see that shit, guys? Like, tell me that wasn't respected. Look at this. That was the B. That was the first target of this butterfly. Okay? We come back down, we hit the B, we dead cat up, we put in a slightly lower high. Okay? So again, you're going to have the initial high on price, okay? Litecoin $334, okay? Then we're continuing we painted, it's a little tight, but you had a slightly lower high there, okay? And now you're painting the final high. And ideally, it's going to be a square up of this previous whole candle. Gets squared all the way up, but not necessarily. Any point here, it's still a lower high, and this is confirmed. It just typically, you trap people hard and you make them think that, like, oh, that was it, it's over, we can see the light, we can see shore, right? We're in a boat, we can see shore, land ho. But all that happened is you hit the eye of the storm. Okay? And what happens at the eye of the storm? You find some calming, right? Right now nothing's really happening, right? Everybody's kind of like recovering, right? What happened? Like, we had a lot of incoming shots from the other side. Shots fired. And then the bullets stopped for a while. And everybody's like, okay, is it over? Is the storm over? Are we going to make it? No. The other side was just reloading, bruh. So when you come back up here and you square up, some of these bears are just going to reload on you. And they're going to dump it again. Okay? But at some point, you weather that storm if you can survive it, and you come upon an edge, okay? Well, down here we got a square up. What else is it? It's going to be, okay, so the way we actually like to hit these targets, we like to hit the B, and then we like to hit a 618, and then we like to hit these C and A's, if you can get them all. You don't always get them all, but that's how you would paint them out if you would layer them out, okay? So basically, if we were painting right here to the completion zone 1618, I'm not taking it to the highs, I get it. I'm taking it to the pattern, okay guys? If I was this pattern, I came down, I hit the 50, Dow's theory, okay? Any asset that with impulses up typically must retrace 50% of the way. So you hit douse, you come back up, you put in the Bukowski three falling wedges, three falling peaks, but you also hit the B, okay? But you did not hit the 618. If you came all the way up, yes, you probably hit it, but these wicks are outside of our pattern. This is a large structure, guys. So let's just stick with it here. Look at what's at that square up, the 618. This square up was not there. This blue line was not there because of the 618. This blue line was there because of this square up right here. It just so happens, once again, we're painting things that align, right? We paint these areas that just come together, right? And that's where our edge, we want to find these areas, and when we get to those areas, at that time, we want to see the proper development on the oscillators. If everything lines up at the proper area, that's telling us it's time to enter the next position, okay? So is this a bit of a midpoint? Yeah, we got to be careful. What is going to tell us if that this is time as well? Bitcoin, okay? So we need Bitcoin to be at its reversal area, cipher, when we hit this zone on Litecoin, okay? Simple as that, guys. Now, this one, banned. This thing got just devastated. Can't believe how bad that sold off. I don't know which asset it was, if it was banned or if it was something else, but one of you guys said one of these things went to like a dime or something. I don't know, or $1. I don't know, something really bad. Alright, guys. So look, we painted actually on band. It dumped so damn far, it hit a 1618 golden mean ratio. Like, this is lagging a lot. Sorry, guys. Okay, let me see if I get it now. Alright, here we go. Alright, so this thing dumped so hard last night that if you fib from the X low to the A high, you hit the 1618 golden mean ratio. That's how bad that dumped in one fucking candle. Wow. Okay, so that was from $20 to $10, guys. Oh, yeah, that one hurt. Ouch. Okay, but what happens? Dead cat, bear flag, painting a rising upsloping channel here, starting to. So you have some kind of channel. We'll see how it paints, but you might get up to that high side of it. Maybe it's tighter. I don't know. It's probably more like this. So you come up, you hit this top part of it somewhere, and that's how you get, let me tighten it up, something like this. So that's how you kind of get this square up here, okay? And again, this square up would be a level that, you know, we could see get hit. $20, again, psychological round number, acts as resistance, again, right? Because people just, $20, right? Freaks out. TikTokers freaking out. Oh my God, $20. They're probably buying it actually, but either way, it's psychological round number. Here you go. You have the high on price. Then you have a lower high on price, and you would get your 3 falling peaks, okay? So something like this, guys. This is what we're looking for on band. Then we proceed to sell off. Because you already hit that 1618 and it's so far away, I could see this maybe just holding back at this line here, which would be kind of a square up of this previous level anyways. It's possible you get some strength on it just because it kind of, you already swept all the liquidity. But any sort of double bottom here will be good. So what you're basically going to start doing is you're going to be painting the opposite structure at that point that we've been painting the past few weeks at that point, right? Where you have a low in price Ideally, you get a slightly higher low in price, right? And now you start painting the, the three rising valleys or something, right? So it's just a bunch of waves back and forth, back and forth. And one depends who's in control, and then the price just shifts from control from the bulls back to the bears. So as a trader, you have to be able to get through those ebbs and flows, right? All right, look at this sucker. YFI held up extremely strong. Look, the stop was never actually hit on this one. It depends where you had it. But that was that initial Gartley, and you sent it from that Gartley. You basically just double bottomed at that Gartley after you dumped last night. This is that double bottom where we'd be looking for on like band, right? You already got your harmonic. Now just double bottom, confirm it at the pattern completion zone. And then you can see a price to the upside again. So what else did we maybe have here? Little scrub. Okay, so this is basically what I'm kind of looking at here. X, A, B low, C high, 786 cipher would be here where this low was, okay? But this wick got a lot lower. Either way, it was like you painted a harmonic and you squared up an area down here. See this area? You had to square it up. 42,500, you squared it up. Then you ran again. So you're back testing and holding what was once the previous high here on A, and I bet you that looking left here, that seems to be a previous high somewhere else. Yeah, you see this high here, A, this other high here on A. Well, strike 3, remember that? Now you're back above it. So as this asset's holding up extremely bullish in a very uncertain situation here. Okay, so nothing, no edge here. The edge would have been down here, but again, we didn't. That was buying a falling knife. Okay, so you got to be careful there. We were not. We were not positioned for that because we did not have a clear discernible. See, there's no edge there. You had a harmonic, but that was it. And sometimes, is it good enough? Sure, but we don't care about sometimes being good enough. We care about aligning a perfect storm. A harmonic is just a pattern. When you look at the trading strategy again in the pattern or in the channels for duck trading strategy, you'll see that a pattern is, yes, one of the items. It's one of the first items. We need to develop structure. Is a pattern always a harmonic? No, a harmonic is just a type of pattern. 3 rising valleys, 3 falling peaks, double bottom, head and shoulders, Adam and Eve. There's all these different type of Bulkowski patterns. They're all patterns. Checkbox 1. But just because you have a pattern doesn't mean shit. If you were building a house, right? And you poured a foundation of concrete. Do you have a house? No. You have a pad of concrete on the dirt. Okay? So think of your harmonic as your foundation for your structure, for your home, for your position, for your trade. Do you need it? Absolutely, you need the foundation. You need that core pattern. Or else your house will crumble, right? Fall right on top of you and wreck you. But again, by itself, it's not a house, right? You need walls, you need a roof, right? You need stuff inside. So those are all your other variables. Those are your divergence on the MACD. That's your divergence on the RSI. That's your critical support resistance level looking back left over time, critical level. That's your fib level, right? You're putting all of those things together with said pattern. Then and only then do you have a proper home, structure, pattern, position, alert. That's when you can FOMO. And only then are you allowed to FOMO. That's when you could blow up and spam the chat, blow up my DMs, DM me on Twitter and in the Discord. I don't care because I'm going to be proud of you and happy, and we're all going to make money when that shit happens, because you're being patient and you're waiting for something to align in harmony. Okay? Find your pattern, wait for the divergences. Sometimes a pattern hits and you need a second double bottom at that completion area. So when you complete it for the first time, you didn't technically complete it. You've completed the pattern, but you didn't complete the house, right? The rest of it is the double bottom. Now you have a second pattern, a Bulkowski double bottom, at the pattern completion zone of a harmonic with coinciding variables on the MACD and the RSI at a critical fib level at critical horizontal line resistance. Then you spam the chat, okay? And there's assets across the board, so there's always something that will have those aligned if you open your eyes and your mind to it and accept that it's out there, and just wait until you can find it. That's how I'm teaching you guys to learn how to fish, right? So you now know what to look for, and now there's 500 of us. Everyone has 2 pairs of eyes. So, or everyone has a pair of eyes, right? So that's a lot of eyes out there scanning across a lot of markets, looking for a lot of potential setups. But just because you find something, don't just ape in. Look for confirmation. That's what you use me for. I teach you how to fish, and then later you come and you show me your harmonic, and you say, Duck, look at this fish I caught. What do you think? And I'll be like, man, that looks like a hell of a nice fish. You're going to really enjoy that fish tonight. And, you might want to even get it measured. It looks like that might be fish to go on the books, right? So that's the way we use the Discord, is to confirm patterns back and forth with each other. And if and when many of us, especially ones that have been doing this, longer than some others, if you're newer and you have a bunch of veterans confirming what you're seeing is correct, that's another form of variable you're adding to your position, to your coinciding variables. We already had a house, and now you get it cosigned by a couple OGs. Well, now you got an upgraded house, right? Smart house or something, right? Put some solar on it or something, right? So you got upgrades now. You don't just have a house. There's different types of houses, right? So you want a sick-ass house. Well, you need, in order to have that, it's got to have a lot of variables, right? It's got to have a nice exterior, it's got to have a nice roof, it's got to have a nice landscaping, it's got to have nice appliances, nice flooring. So you got to have all those things. If not, you just have a pile of lumber in the yard staged, right? That's not a nice house yet. So be patient, look for everything to align. YFI here, it's already going, no edge. We don't buy this. We just eat some popcorn and watch it. It's cool. It's just entertaining at that point. Wait for an edge. Here we have Dash. Dash. Let me take this to the daily here real quick. Okay. So here we have Dash on the daily, and basically what happened is we hit target 3, right? Came up, hit target 3, and then you just sold off. And what did you do? You basically just kind of back tested this previous area again, this previous kind of neckline area, squared up this area, back tested, you touched that parabola again, kind of that moving average. So for time being, you're okay here on Dash, but again, there's no real edge. You would figure Dash would come up a little, square up something here, and dump again. Somewhere you're probably going to lose the parabola, back test it, and then dump again. Somewhere down here, I would then look again for a long, but right now, nothing discernible here on Dash. Even low time frame, it's kind of blah, meh, one of those, right? Sometimes you guys tell me to look at certain charts, and sometimes I chart them, and sometimes I don't. And the times I don't, it's because I look at the thing and it's just there's no edge, right? So there's no time, there's no need to dissect every chart every day if there's not something that's standing out at us, right? So you'll see when something appears very apparent to you, because you'll find that when you open up these oscillators or something, the divergences are very apparent. You'll find yourself sitting on one of these critical lines and you'll be like, oh, okay, what is this? You'll look back left and you'll see, oh, what was once, resistance is now support, and I'm back testing it and I double bottomed on it. That you'll start to paint a picture, right? So until you have a clear picture, you just keep moving along. And okay, so guys, I gave you guys that, it's in the, I think, cheat sheets or something. It's called Sandwich. It basically gives you a watch list, a TradingView watch list, where you can take these watch lists over here on the side and you can have all these different watch lists. And once you have them set up, all you have to do is then hit the space bar, and you can quickly go through these assets until you find something that starts to align, okay? So something I might be looking for on Ethereum Classic is from these previous lows, we put in the high, we sold off, we put in the partial decline, 618, we come back up, and this could be anywhere from a 382, which you're already at, all the way to an 886. So somewhere in here, maybe you reject this scrubby trend line, and then you come down and you put in a slightly higher high, 786, Gartley, run again. That's your edge would be created once the structure is finally paints. But right now you're just in chop. You're in chop, indecision, doji, currently painting on the 4 hour. Literally, when you're painting an indecision candle at a range middle, it's just the market's trying to figure out where it needs to go next or where it's going to go next, and nobody's really decided here yet if we're going to push this thing back to 70K all-time high again, or was that it? So the market's just kind of like, what am I doing? What am I doing? Waiting for participants to step in and push price distinctly to one or direction or the other, okay? So we'll just wait here for further development. Maker, again, you're starting to paint something where you have an X, A, B, C, potentially get the D down here, and something like this starts to paint. Maybe this is even coming from further back, right? You just have to play with these things until you find one that follows the rules, okay? When you find a harmonic that's aligning with the rules, you then wait for it to complete. If and when it completes, you have coinciding variables, you are confirming to yourself that you're correct. Because like we know, some harmonics, like a bat, could very quickly turn into a butterfly, and it wasn't time yet at the bat. You needed to wait it for the butterfly. What told you it wasn't a bat? Because when you got to the bat, you still had your variables weren't diverging yet. They were converging still in the downward or upward direction. They weren't aligning properly. Okay, we just went over that couple charts back, how they need to look when they align properly. So if you check them, you're at a bat and the divergences aren't there, it's not a bat. Sure enough, keeps going, turns into a butterfly, right? So that's the kind of thing we want to watch out for. So Maker, not time yet. Bitcoin Cash, not time yet. Dogecoin. Okay, this one was interesting. This was the only one we started to actually see some structure, okay? So let me actually take you to the hourly here. I think we could see this a little clearer. Okay. So this is our structure again, guys. You're going to see this, okay? So we had the low on price, slightly higher low, again a higher low in price, and now once again are putting in another higher low in price. So as long as this maintains, the dog has a chance here, okay? You also had that ridiculous CME listing Dodge on the freaking mercantile exchange or whatever. That just, I don't even have words for that. That's the kind of shit that says top is real close. So you had the initial, like, you had that initial dump, and now people are in complacency, or I don't know, because I can't even believe I just said CME listed Dodge, right? Like, that's stupid. It's not even a product or project, it's an abandoned project. The creator of the project himself said, guys, we abandoned the project. The fuck are you doing? You can't put that in people's portfolios on a CME. What the fuck is wrong with people? God damn it. Alright, moving along. Okay, we just talked about this being a bat. If we get a bat, okay, perfect example. This is where we'll see a bat potentially paint, okay? So we'd see an 886. What tells us this is a bat? Because the B was a 50, okay? If the B was higher and you got a 618 here on the B, like this, then the D would be a Gartley and it would be a 786. So you see how harmonics are so close to each other, but yet they're different? Okay, so look, the fact that this is a bat also says that it could be a butterfly. So we need to go up here to the 886. Boom, 886. So this is the next area of interest on the dog. It is not necessarily it, okay? It's just a area of interest. 0.420 figures, right? 420. 420 on the micro. 42 cents, or I don't even know what the fuck price of Dodge is. 42 cents? Jesus. Or it will be at that point. Anyways, 886, this is where a bat can go valid. But what'll tell us that is the divergence. We need to have painted the divergence. We needed to have ran up on the RSI and then failed a little bit and then kind of went back up again, and then that's where we get this like bearish divergence at the 886, okay? But if that's not there, okay guys, if it's not there when we get up there, if it just still shows that there's still room to run, this bat will quickly become a 1272 butterfly, okay? So you see how a harmonic by itself was not good enough. If it didn't have the aligning variables, it wasn't a bat yet, it was a trick. It was a pile of wood that you thought was going to be a house, but it really turned out to be a shed or something, right? So you got tricked. So you got to make sure it's a house. Wait for that thing to get built and wait for the rest of it to be there, right? Those variables. Look and see if it has a roof. Go inside, see if there's a fridge, living room area, some bedrooms, make sure it's an actual house. And then and only then do you start to say, okay, let me then now start to layer. Okay, and what do we mean by layer? It just means if we were going to put $500 into this at the 1272, we take the $500 and we split it up into increments of maybe $50, and we layer 50, 50, 50, 50, 50, 50, 50, 50, and you dollar cost average, but you're dollar cost averaging at a completion zone. You're not just dollar cost averaging the entire bear market, every paycheck putting in 100 at whatever price that is. There's no strategy there. That's just throwing money into an account that at the moment has a negative interest. Okay, so you're dollar cost averaging at a strategic area of interest, okay? It's critical thinking, dollar cost average type of stuff, okay? You're being methodical with your entries and you're layering so you can get all of you're not just buying the front end of it. Sometimes it runs a little back from the initial entry point, so you're able to soak up a little bit more of that and get your entry averaged a little better. Okay, does that make sense, guys? All right, so on the dog, you're looking for 420. It's almost locked in stone, right? That's going to 420 again. And you have a square up over here. See this square up where these traders settled up on April 16th at basically 0.4 at 40 cents. So it looks like price wants to go back up and at least square up that level, and then ideally maybe sweep it and you hit the 886, and then we'll see, right? We'll see if people are ready to push this up, or if it was, again, like I said, you're this you buy the rumor, sell the news. Well, the rumor was Dogecoin was going to the moon. And now the news is CME listed Dodge, okay? Well, the news is out. Everybody knows CME listed Dodge now. So you think everyone piling in when CME says we're listing Dodge on TikTok is the time that you should be buying? No. The composite operator and the market maker and the CME and Elon and everyone else already bought in long fucking time ago. You're buying the news. You don't buy the news. You sell the news, right? So we're looking for a bearish harmonic to develop where we could short the dog and sell the news, okay? That's just how we're going to exit the position, but that also kind of gets us to how we're going to get to targets, right? So on the low time frame, the alert went out that basically, I believe, I think it was up here. Maybe it was down here. No, I want to say it was up here. So, buy dog. Buy the dog. Yeah, look, I could put a dog on it. Buy dog. Okay, so that alert went out like right there somewhere. Okay, so stop below the previous discernible swing low. Very tight invalidation. Nothing to worry about. If you guys are like just on like 1x or spot, I mean, you could even use this one. Okay, it's up to you. Again, depends on your leverage, but we're trying to be mindful of that like we've been talking about since day one. Next, we're looking for a neckline, a clear and discernible neckline that appears to be getting back tested as what was once resistance, resistance, resistance is now support. Yeah, we could bring this even tighter. I guess we could say this was even right here, right? So by being conservative, there's nothing wrong with that, because all it's going to do is make our measured move more conservative. When we take a measured move from the low to the neckline, right? Or sorry, measured move, basically like that. We will clone the measurement so it stays identical. We will bring the measurement up to the breakout point, and you can see how that aligns with the area up there. If we went to that original spot we had this, okay, something like this, all that does is make your measured move target further out. But the reason I'm doing it here is because it's coinciding more with our other variables, okay? So now we have our measured move area, okay? So now we have our break. We kind of we fell below it, but again, it's not always so much about the fail, it's more about the follow through. And all you did is square up something down here anyways. It's not even a big deal. That's just where over leverage kills you guys. So look, would you rather, let me ask you a question here. Would you rather have compounded gains of a smaller position on lower leverage, but you get to actually generate and compound gains? Or would you rather just get stopped out a bunch of times on a high leverage and compound losses? I think you can answer that question for yourself at this point, right? So again, self-infliction here is really the only problem you have. You're getting the ability, you're learning right now what to look for. Okay, you're learning how to fish. You're practicing right now. You're learning how to read the waters, right? Read the weather, read the time of day, read the type of lure, read the type of line, type of pull, the way you need to stand, the way you hide, the way you dress, what you need to pack for lunch. You're learning everything on how to go fishing. Now, Don't trip and fall into the water and scare all the fish when you get there. Okay? That's self-inflicted losses. If you do that, throw a big old rock in the water where all the fish are hanging out before you cast into the pool. I mean, nobody other than you did that. That's you throttling the leverage to max leverage and aping in with everything and thinking that just because Duck posts a setup, I've seen his setups play out, this one's going to play out too. And yeah, do they play out? Sure. Are we about to watch one play out? Very probable, okay? But do they fail? Occasionally they fail, okay? And that's why we set stops. You can clearly see on the board there's a red line. You can also see that there's target areas, okay? You can also see, I believe we moved our stop up at this point, and you're allowed to do that once price starts moving away from the entry. But, whoops, I believe the original stop was actually down here when we alerted this. Either way, you guys can see how we're using stops. What we're identifying are discernible swing lows, discernible swing low, discernible swing low, and we use those as protection for our stop loss. We don't put our stop right on the line either. We put it slightly below the line. But either way, that's the way we use stops. Discernible swing low points that would be identifiable anchor points if you were fibbing or harmonicking from said point. Next, fibbing from the high to the low. You can see here we have an 886 and a 786 zone inside of the measured move and the square up. This is where we're layered initially. You're more than welcome to take profit there and be done with this trade. Okay? There's nothing that says you have to risk this turning into a butterfly, but what if it's a bat and I give it all back? Just take the profit right there and be done with it. There's nothing wrong with that. I mean, a spot trader right now is going to take 25% there. How greedy are you? Just take the profit. Look for the next setup. Okay? It's much better to lock in that 25% than to give it all back to break even. And can it do that? Sure. It could be a bat right there, remember? So you got to be careful. But yes, it can also be a butterfly. Do you have to take profit? No, but at least move the stop. Okay, so if it is a bat, you're at least stopped in profit. But if you want to shoot for the butterfly, you're doing it with protection. Okay, you're not just going out there in this area of space, with no protection, no suit. Right? You trail the stop at the very least. If you want to get that, try and get it. That's fine, but that requires more managing of the trade. You could set a trailing stop. But either way, once you reach, if price goes from where it's at to this level, okay, if you get up in that level, do not let it, move this up somewhere, please. Because even if it's here, at least you're locking in 10%. I'm fine. I don't care if you make 10%. That's great. That's good. Good. 10% gains are good. Go up, get a little more, whatever you can milk out of it, good. If you can milk the rest, you're getting even better. But at least just get what you can get. And that's how you're going to get your losses back from yesterday if you suffered any, okay? You got to build your stack back up, and you got to do it methodically, and you just got to do it conservatively as well. So that would be a conservative target for a conservative trader, taking a measured move of a 3 rising valleys on a low time frame on a shitty asset. Okay? We're not here because Dodge got listed to CME and we're going to add this to Grandma and Grandpa's retirement portfolio. We're not. We're here because we see a potential slight glimpse of opportunity to lock in 20% gains, and we're going to lock it in. And we're going to move on. And we're going to look at the next asset, and we don't care what the asset is. Okay? Next, back to the coin. Okay, let's go back to the 4 hour. Let me, I don't know, there's a lot going on here. Let me zoom out. Maybe that'll help. Okay, so we're back above that area, which we didn't care if we did or didn't get back above or not. I still don't think that that is going to play that much significance here. Um, what's more significant is this three falling peaks reversal pattern. Right now, you had two falling peaks. Uh, yeah, you need this third one. Okay, so what we're going to talk about right now, guys, we're basically kind of done with the charts there. I just kind of want to go over a few things about just, just TA in general, mindset more than anything, psychological, all that kind of stuff, okay? So the reason we're technical analysts and not fundamental, right? People always ask me about FA and if I care about the project and all this shit. And I'm always like, no, Duck could care less about FA. Ask Dime. I've said that to Dime 6 million times. Duck doesn't care about the FA. I'm only TA, strictly TA. Can they align? Sure. But what you find often happens is the FA news is just released at the completion zone of the TA anyways. So if you were just looking at the TA and never even knew or seen the FA news would have been irrelevant because the TA would have played out the way it was going to play out anyways. Okay? So currently right now, TA is king, FA is not. Okay? TA is harmonics, FA is Elliott waves. Okay? So we're TA, we're harmonics. Okay, so the reason we're TA also is because technical analysis gives us as traders an unlimited number of possibilities. Okay, at potential trade setups. We just talked about this on Dodge. We said we're going to get our gains, we're going to get out, and we're going to look to another asset. You know why? Because the fact that we now know how to fish and we now know what setups we're looking for, we just talked about that for the whole last hour. We now have an unlimited number of possibilities at hand. So there's no need to FOMO anymore. You've just removed FOMO because you're not going to miss out on anything. There's going to be a continued unlimited number of possibilities. So patience here is key. Patience and the ability to scan multiple assets simultaneously. That's key. Okay? So again, technical analysis, basically it's providing you an endless stream of opportunities to enrich yourself. That's why you're here. An endless stream of opportunity to enrich yourself. That means if you do this right, and if you could play your cards right, you know that's why you're here. Because you can have a life of financial freedom to, at that point, be able to do whatever the fuck you want. Right? F you money. Okay? That's why you're here. But we're not greedy. Okay? We're not greedy. Okay? Bears make money. Bulls make money. Greedy pigs get slaughtered. We witnessed a massacring happen no less than 24 hours ago. Anyone that was greedy was slaughtered. If you were simply a bear or a bull, you found a way to make money. You found a money to make money for the past weeks, months. It doesn't matter if there was bullish setups, there was bearish setups, as long as you weren't greedy, right? Okay, so again, guys, look, if you have an endless number of possibilities, the reason it's like that is because we are teaching you here the way to master trading, okay? So TA, harmonics, divergences, MACD, RSI, Fibonacci, support resistance, Bulkowski patterns, all of these things can be mastered, okay? Does it happen overnight? No, nothing does. Nothing that's if it was easy, everyone would do it, right? So something that's hard that requires a level of skill and understanding is not something that comes overnight. But if you put in the time, can you achieve it? Absolutely. Okay? but you got to put in the time and you got to do it properly, not greedy. Okay? So you can master this. So become a master of all things that we talk about within our trading strategy, not outside of it. And never once have I told you ever to study Elliott waves, nor will I ever. That goes along with many, many other things, okay? The only thing I've ever told you guys was Bulkowski patterns, harmonics, MACD, RSI, Fibonacci, and support resistance. We're keeping it basic so we don't overwhelm ourselves. And by keeping it basic, it allows us to be able to identify similarities over and over. If we have a million indicators and every time we look at something we have a different indicator, you're just looking at one that fits your bias for that given time because you're in an underwater position or something, right? So like you're not helping yourself. That's how you hurt yourself, right? So you don't do that. You stay consistent with the couple that are our bread and butter, and we use these indicators for a reason. We don't use them because they're pretty or because they sound cool or because whatever. We use the MACD and the RSI because they are leading indicators. We're trying as technical analysis to read what the market is doing now, not what it's going to do in 3 years, or how Bitcoin's going to change the world, or how Ripple's the new standard, or none of that shit matters. All that matters is what's happening right now. As soon as that we get a change in bias that says divergence is built, just happened, alert, piece, completion zone of harmonic support something, we need a flip, right? We don't care. We no longer care about Bitcoin. We're now bears. We're shorting it to zero until something tells us to flip. Now we're back in. Now it's all in Bitcoin Valhalla time, and we just flip back and forth as the technicals tell us. Bulls make money, bears make money, greedy pigs get slaughtered. Okay? So you can be both bullish and bearish. The best traders are. The best traders are the ones who can flow back and forth, the ebbs and flows, back and forth, okay? So basically you have to think like a winning trader, right? You guys are going to get all this when you listen to the Mark Douglas Trading of the Zone audiobook 30 fucking times, okay? That's your homework over the next couple months. So you're going to hear this over and over and over, and it's going to more and more that you hear it, it's going to hit home more and more. And then you're going to remember hearing it when you looking back at charts or trades or setups or whatever. You're going to be like, no, I remember this. I'm not going to do that. They said not to do that. So, okay. You got to think that, okay, so like top tier traders have attained a mindset, okay? That's basically like it's a unique set of attitudes that allow them to remain disciplined, focused, and confident in spite of adverse conditions that we're witnessing. Okay, you saw yesterday this just nasty just dump, right? So how are you going to be able to maintain this mindset, remain disciplined, focused, confident in spite of adverse conditions? Okay, so look, let's say we're on a boat again, okay? We're out in the middle of the ocean and we've hit a bad storm, okay? We thought this might have happened, but we really didn't know, but we thought, so we kind of came prepared, but but ultimately we ran into a storm, right? Big shit show's going down, and the boat is rocking, okay? Everyone on board, all the tourists, right? We're just on a big cruise ship or something, right? We're on the Titanic. All the tourists are scared. The rain is pounded down, high seas, choppy waters, the boat is swaying, everybody's, glass is breaking, things are falling off shelves, everybody's getting scared, kids are crying, all hell's breaking loose, they close the events for the night, everybody go back to your quarters, everyone's scared, they're passing out life jackets, everyone's freaking the fuck out, okay? But one person, right? The captain of the ship is remaining disciplined, focused, confident, in spite of these adverse conditions that he's facing right in front of him in real time. He has to navigate this ship through these choppy waters in order to come out on the other side and make sure everybody's safe. Well, how would he be able to do such a task if he was panicking and freaking out like everybody else, right? It's because he's attained a mindset as a veteran sea captain worthy of fighting, the ocean storms, right? That they throw at him on a nightly basis. So he did that through years and years of training and training his mind to not panic or he's no longer afraid. He knows that if he does what he's supposed to and what he's trained to do, that his vessel is capable of treading through these bad seas, right? So you're building this vessel with your knowledge of your technical analyst basics, right? But you, along with that vessel, you need that proper mindset to trust in yourself and to trust these setups to play out. And also to not be afraid if you get stopped sometimes. And you're not afraid of it because it's properly positioned. You're not going to lose the farm if you hit a stop here and there. And why? It's because plenty of other positions ran to targets. How many targets did we hit in the past couple weeks, guys? How many? Think of the position on Ethereum, guys. We bought the freaking damn near bottom and we sold the fucking top. Like, you have found that we figured that out. Look, we were able to do that, right? Based on our training here of our trading strategy and our technical analysts. So I don't know. You just got to trust in it, right? Trust in the system that you're learning that it works. And if you can trust in it, you will no longer be afraid when the market's throwing red candles at you and you're in a bullish position, right? Because you know that's just choppy waters on the way to my eventual target. Eventually, do we get stopped? Yes. But like I said, how many targets were hit in ratio to how many stops were hit? And those stops were fairly tight, and most of the trades had already completed, so most of that money was already on the sidelines. A few were still running, and those few got stopped, and most of them should have even been stopped in profit. So if all that occurred, nothing really bad happened, even though we ran into a storm. Our boat came out unscathed and continues to be able to sail the open sea, right? We could continue to profit and have customers because our boat isn't damaged, right? We could run another cruise the next week, right? Another full boat. So you need to be confident, and then also because we let some of those trades run to targets, we got more than 3R, 4R, 5R, 6R, 10R. So if on others we got stopped out for a loss of 1R, on another trade you made 8R, the average of those two trades was still 7R profit. That is the importance of equal position sizing across the board. Every time you get in a position, you need to do the same amount. Because if you do that, the stop is always the same amount. Okay? If you're varying your position sizing and you're varying your leverage, your stop amount lost is always going to keep varying. And some of those are going to hurt. They're not able to be a 7R1 against a 1R lost. It's going to be like a 7R1 against a 20R lost. That can't happen. You got to just be losing the 1R. And it has to be in proportion, proper proportion, okay, to your size overall. Okay? Again, the casino guys, you don't walk into Bellagio with 10 grand and throw it all in the first hand of blackjack. You get some chips and you get a few colors and you put a couple out at a time, right? It's not the whole thing at once. I bet you none of you do that. So why the fuck do you do it in trading? It doesn't even make sense. Ask yourself that. Okay, guys. So look, most traders, I mean, you're gonna suffer initially for a long time, both emotionally and financially. It's just pain that every trader has to suffer through, and some make it, some don't. But that's why they say 90 whatever percent of traders lose money because they're suffering those emotional and financial pains as infant traders. They see this market. Oh, I'm on TikTok. I see all this shit. Oh, I need to get in, and then they just get ran over. Right? It's because they don't have a plan. They're over leveraging, not proper position sizing, no stop losses. They're not even setting targets. They're in it for the tech on Dogecoin, like all the wrong things, right? So unless they were born into a family of traders or are under the guidance of somebody like myself who already has a trading mindset and has the ability to relay it back to you the way I am right now, you will struggle initially, okay? So again, most people they basically either run out of capital or they give up because of that initial struggle and that initial pain, right? Are there a few that weather the storm and make it? Yeah, I mean, there's a few, but there's a few people around that are just great like that, right? So, can you be one of those? Sure, but is it much easier to find guidance and a plan, especially one that's proven? And we've shown you guys repeated. The only reason you're here is because you've seen these trading strategies, these trade setups play out before, like on Twitter or wherever. You saw me post them, and then you said, okay, I remember he posted one of these. That sucker hit that damn target. Whatever. A couple weeks go by, maybe another one goes across your feed. Oh, look, there's another one. A couple week later goes by. Oh, damn, look, he hit that damn target too. All right, well, so few times like that go by, and eventually you're like, oh, shit, is this guy actually consistent, or let me see what's going on here. So now you start to like look a little deeper. Maybe you actually go to my profile, or maybe you put the alerts on. You're like, let me follow a few more of these, and a few more hit. So now you've now convinced yourself. You're like, something he's doing is right. What is it? I need to figure that out. And you think it's the technicals, and it is. 40% of it is, but the other 60% was me being patient and letting those trades hit their targets. I know Dime, again. I use Dime because I talk to Dime a lot as an example here, but he says that like Duck has the patience of an angel, right? Because trading is a patient man's game. So if having the ability to allow a trade to go from an entry on a setup to its target requires the patience of an angel, well then hey, work on that. Add that to your to-do list. Find a way to become patient. Do a bunch of guides on how to increase patience in your life. Maybe you don't have patience in your life because you're trading with money that you can't afford to lose and you need to pay rent with it in 3 days. You need a trade setup to play out in 3 days. You can't be patient. You over leveraged. You over positioned. You have to make the money now. Well, that's not how this works. You're going to fail every time doing that. That's the greedy man, being impatient, okay? What's better as a patient man? How do you become patient? Let me tell you. Because I know you guys have done this before. You've done this yourselves, okay? Let's say you are in a trade and it was a good one and you took profit on it, okay? But you didn't take it all off the table. Maybe you just left a small little bag just riding just to see what would happen if you didn't take profit, right? Maybe it's just like 5% bag or something like that. And this bag ends up running and running and running. And you're just like, oh damn, if I would have only stayed in this trade, I got out at like 20% gain, but if I would have been more patient here, I could have got out at like 200% gain. Shit, and you're all mad because you left money on the table a little bit, and you're just like, damn it. Well, don't be mad about that because the mindset was the issue there. And your mindset would not have been the same if you left the initial position running. See, the reason being is because too much money was at stake at that point. There was too much in the position, A, and B, by the time you got to that target, there was too much unrealized P&L to not realize it, okay? So the reason you were able to let the rest run is because you took the majority of that trade off the table and were able to then you didn't care anymore because you got the money you had entered was already back in your account plus some profit. So now you're playing with house money, right? That's where you need to get to. Or even if it's just your money, the reason you were able to let it run further is because the amount was in proportion to your stack as a whole was so minuscule that you didn't care. It was easy for you to let it run. It wasn't affecting your entire world, okay? It was just a small little few amounts. So think about that when you start position sizing. If you only are using a small percentage of your overall portfolio in said position on said coin like Dogcoin earlier today, say you had 10 grand and on Dogcoin you only entered with $300. Well, it would be much easier for you to run that $300 to the target, which would get you 25% on your $300, or you stop out for a small loss of like 40 bucks. And it would be much easier for you to allow that to occur, and you wouldn't even care about it. You would set the stop, you would set the target, and you'd move on, and you'd check back the next day or something, and you'd be like, oh, look, Dodge hit my target. Oh, look, there's more money in my account. Or you'd have an alert there prior to when it hits your targets, and your alert would go off. So your phone would text you and you'd be like, oh shit, Dodge is about to get to my targets. So now you would go look at it. But you didn't need to watch it all freaking day. You just waited until it either hit and you checked back or you got the alert. But what happened? You lived your life. You were resting easy. You weren't stressed. You weren't worried about the position. You weren't over positioned. You weren't over leveraged. And you allowed things to play out as they should. And you also got the full 3R out of the position, or 4R, or whatever your target was. And that was because of your mindset. That was because you allowed the harmonic or the three rising valleys or whatever it was to play out, because you've seen this before. This isn't your first rodeo. You know that when you see three rising valleys and you put in these consecutive higher lows and you have coinciding bullish convergence, and you have a neckline and you're back testing it as break, hook, and go, and you have a measured move and you're like, damn it, this measured move typically hits, and you put some targets there and you set a stop below the previous discernible swing low, and you just set it and forget it. It's like the easy bake oven, right? So that's all you got to do, guys. And you do that robotically, and you do that every time. And you keep that 100,000 or 10 grand, and every position gets 300 bucks. And eventually the 10 grand is 11 grand. Now each position gets $325. And then eventually that 11 grand is 15 grand. And now every position gets $400. And you continue to take the $400 to 25% gains, or you lose 1R and you lose 40 bucks or something, right? So whatever that ratio being on that risk to reward tool, whatever that position percentage ends up being, it changes, right? But you see what I'm trying to tell you is you're slowly just chipping away at the exchange. You're chipping away at the liquidity. You're just that fly on the wall. You're just following these whales around, and you're just grabbing this low-hanging fruit as they're just dropping food out of their mouth, right? You're not changing the world here. You're not setting the market. You don't need to do any of that. You could just pick away and be this lurk that just becomes financially free, okay? That's it. That's how you win, okay? So let's just keep moving. We'll go a little bit more with a few things, and like I just want to let you guys know that like if you feel like the market's ever against you guys, it's not the market against you guys. The market is actually neutral. What's against you is the leverage and the over positioning, okay? Again, it was self-sabotaged. It wasn't anything but yourself. So just don't feel like the market's against you, or like you have this bad luck or this dark cloud over your head. It's not that. It's that's something trying to tell you that you're over positioned or over leveraged. You're just not reading the signals right. It's like when you thought you needed to learn Elliott waves, but really it wasn't that. It was you needed to get your mind right. You're looking under the wrong rock. You see what I mean? So until you find the right place to look, you're never going to really realize where you even needed to look. Okay? So I'm trying to point to you, "Hey, bro, stop looking over there. That rock you're looking for with the big worm under it to catch your fish. It's over there on the right, up in that nice, moist soil close to the water. Go over there, pick up that rock. There's a big old worm under there. Put it on your hook, throw it out. Boom. Okay, get a fish." So you're looking over there under the dry rocks, up by the cliff wall. Like there's no worms over there. Okay, so like that's where the Elliott waves are. Get out of there. Come over here where greener pastures lie. Okay, that's where you'll find gains. That's where you can find, your fish. So, okay, so look, there's the market, like it's neutral. It's just painting these candles based on how participants are reacting to it, the way they perceive the candles, right? If somebody sees a red candle, they might get scared and all of a sudden they mark it out. And if the red candle goes down a little more because they aped out market lost sold for a loss, but it also caused price to go down a little bit. That's just them perceiving the information differently. For you, you're like, whatever. All that did was backtest the neckline again, previous support area, whatever. We're both perceiving this information differently. So again, that's just the difference in a trader with a fear, their mindset. They just have fear, right? Versus somebody that trusts their setups and has confidence, right? So it's fear versus trust and confidence. So are you fearful, or do you have trust and confidence in yourself, right? Which one are you? You're one or the other. You're not both typically. You're either one or the other as a trader. So, and I'm going to tell you right now, the best traders are not afraid. They're confident in uncertain situations, okay? So right now, I'm speaking to you guys like a fucking guru here when we just had a $10,000 negative candle hours ago, right? How is it possible for me to speak so calm and confident in such uncertain situations, right? It's because I have a mindset that doesn't allow me to be fearful like that. It's basically saying I've trained myself to say, look, if you get stopped out, you lose a R here, you lose a R there, whatever. You know how many other opportunities you're going to have to get those R's back as long as you still have bullets to fight with, right? You got to have a chip and a chair, right? If you go all in, you get stacked. Well, I mean, you're out. Tournament's over. You're done. You got to go back and rebuy in, go back to work for a while, get money, rebuy back in, come back again, play another tournament another day, right? But if you got stopped out because you were like, wait a minute, this guy's raising me on the river. I got a pretty good hand here, but something feels weird. I'm gonna fold. Well, that's you stopping yourself out. You put money in on pre-flop. You put money in on the flop. You put more money on the call when you called the turn. So when you stopped out on the river by folding, you took a loss, but you still have chips. You're still in the tournament. Next hand, oh wait, now I got a flush draw. There's two spades on the board. I got two in my hand. You now have an edge. Two cards to come. Maybe you hit a flush. Flush looks like it would take the hand here based on the cards out there. But if you were never in that hand because you went all in before and got wrecked, you could have never had those two cards to get that next flush down the road, right? So you have to still be able to fight another day, right? So that's just, again, the ebbs and flows, right? Being able to be bearish or bullish, and also just not being reckless, right? You have to be able to just maintain that level of understanding where, yes, I might lose some stops here and there, but I also might get some runners that hit some targets. And just as long as you're not reckless with the over positioning and over leveraging, literally every single stream that I've had, I've said, do not over leverage, do not over position. Be mindful of it, please. Go back to every single one. I don't even know, but I can almost guarantee that they're in there. Okay, so please don't be reckless. Okay, and the reason, so like the reason you guys like are fearful, okay, is because people don't like to be being wrong. Okay, you don't like being wrong. You don't like leaving money on the table when something ran with and you got out too early. You don't like, you have FOMO, right? You fear that you're going to miss out if you're not in a trade at all times. And you just have this other fear of losing money. So these are things that like plague you, and they actually work psychologically to your disadvantage. And the things that the things that you are most afraid of, you will actually make come to fruition. Okay, so like you gotta please work on that somehow, some way. And again, Duck is a harmonic swing trader. I'm not a shrink. Okay, guys, I'm not the one. I might be doing some top-notch shrink work here, but like I don't have some PhD hanging on my wall from Dartmouth saying that I'm a shrink or something like that, right? So there's other people that can help you even more than me with the mindset side of things. Okay, I'm telling you, I'm identifying your issue for you. And now it's up to you to do anything and everything possible to correct it. Maybe some of you, the issue is because of substance abuse. Maybe some of the issue is because you guys are trading with money that you shouldn't be trading with. Maybe some of the issues for you guys mentally is what's going on at home, right? We all are in different places in life. That's why we got to be kind to each other, right? Because we don't know what each other's, where your status is in life, or just how you got to this point. How did you get to from where you were to now listening to me telling you what I'm saying to you right at this very moment, right? So due to that, you're all coming at this from different angles. So some of you may have deeper levels of emotional baggage that's affecting your trading than others, right? Some of you might not even have this problem yet. Some of you might just be trading on spot and you guys are fine. But others of you are trading on 50x leverage and you're not okay. Okay? You need a lot of help. So, which one are you? And depending on which one of those sides of the scale you are, is going to tell you how much help you need or don't need to get you to where you're trying to get, right? So, yeah, I mean, basically, like, you need to also come to the realization of, like, that our trading problems are internal. Like, just like what I was just telling you about, like, we're all at different places in our life, so, like, whatever these things are, like, one maybe in substance abuse or something, well, that's something that's kind of coming from you internally. And until you can resolve that, it's going to plague you forever. But instead of resolving what the actual emotional damage or whatever's causing that to happen to you, because it'll drag over into your trading. It will. Even though you have to try not to, it does affect you. So you need this full rounded life. You need to be sleeping proper, eating proper, having proper emotions under control. You need to have a proper, well-rounded everything. You can't just be good at harmonics. You know what I mean? That's not the full package. You need to complete yourself. A complete trader, okay? So what'll happen is instead of completing yourself, you'll point fingers. You'll be like, oh, well, fucking stupid Kaleo on Twitter told me to buy dog and now I lost everything, so it's his fault. No, what you should do is you should say, okay, look, I see this guy, he gets some good, he hits here and there, so I gotta be mindful when he's posting something. He's obviously seen something, so let me look at that. Okay, let me pull it up. Let me go through my steps. Is he checking all my boxes? Let me see, do I have a pattern? Okay, do I have a good, let me check the fibs. Okay, let me go to the support resistance. Okay, let me check the oscillators. And if everything lines up, well then, and only then, do you go into the trade. You didn't just do it blindly because you saw Kaleo post it, okay? That's not good enough. That's just something to alert you to look at that particular asset. There's a million assets. It's good when somebody says, hey, I'm seeing something here. Maybe you might want to take a look. But maybe instead of aping right there, you look at it and you're like, nah, this fool's too early. His stop is probably right here. This market maker's gonna hunt this stop. I'm not gonna ape right this second, but he is onto something. I am gonna go long here with him, but he's a hair too early. Instead of aping right here and market buttoning in, I'm instead going to layer below this area I've identified because we're between the 50% fib and the 618. So I'm going to layer around the 618 and get one more slightly low in, paint a divergence, and then I'm going to enter. See, you didn't just ape because of him, but he did help you because he alerted that an asset was close to reversing. But what most people would have done is they would have just aped in blindly because of what he said, over leveraged because they think, oh, he's a millionaire, I'll be a millionaire if I just go in 100x on everything he says, and then they get wrecked, and then they point a finger at him. Well, none of that was his fault. All he's doing is putting it out there to what he's doing. Just because he wants to go bungee jumping, is Duck going to go bungee jumping? Fuck no. I'll be waiting in the truck having me a sandwich. You jump off there all you want. Do it 3 times. Then we'll continue on with our day. That trade wasn't for me. But we move on to something else, and he's like, hey, tomorrow you guys want to go, you guys want to go shoot the shotguns or something? And Duck's like, okay, yeah, I'll do that one with you because I looked into that, right? I know that that's something more for me. I know how that works. I know all this stuff about it. I'm not just blindly aping in because somebody wants to do something that they feel they should be doing, right? That doesn't mean it applies to you, okay? At times, does it? Sure. You can align sometimes. There's plenty of times where me and Kaleo will post a similar trade on a similar asset within a very short time frame and not even realize the other one did it. It's because, yes, we do align on things, but there's also times where he'll go long and I'll go short. Okay? So it's not 100% across the board here, guys. Okay? So look, no matter how good you can be and how much you master this, you can never be 100% perfect, which is why the position sizing is so important and the stop loss is so important because we cannot be perfect. We don't want that one mistake to throw all this hard work of the past weeks of gains back in one mistake. That should have just been one small hit and all the gains for the past weeks should have dwarfed it and you shouldn't even be feeling it. That's the way you should be sitting right now. You should be sleeping good. We've been making money, okay? Don't give it all back like that, guys, please. Okay? So, just mindset is how you remain confident in this uncertain world that we are in, okay? So, I hope this stream helped for some of you guys that either missed or just didn't listen to the recording yet from last night, but I guess we'll probably just call it there for tonight, guys, and see you back in the chat. I'll be around. It's getting a little late, but 24/7 here, right? But